G'day folks, welcome back to another update for Bitcoin and Ripple, and we're looking at a daily potential bullish breakout on the charts. We'll go to that in a minute. Also, we're going to include some back testing. Don't forget to hit that like and subscribe button to support the channel, and also reference the +1 videos where we do a deeper dive into some of the trading strategies we cover today. In terms of the outlook, Bitcoin is trading around $115,000 with the key drivers being institutional ETF inflows, and some of the risks are basically around the rising US-China trade tensions. For XRP Ripple, trading around 265, regulatory clarity is improving, and there's still some risks there, of course, with ETF decisions and global payment system shifts. So looking at the weekly chart first, you can see here just almost potential fresh breakout on the price chart, although notice the CCI is still dropping below the moving averages, and we've still got this bearish divergence in play. And I've drawn a target range there, and it's already hit that in the last couple of weeks. So that's already hit it, but although it could actually re-enter that range, so just be cautious longer term, but still a bearish momentum still in play on the weekly. On the daily, if we go to that for a moment, you can see there it did break below the moving averages, and it looks like it's a potential fresh breakout. The CCI is already broken above, and the price is in that moving average range, and it very likely may break above that, and if it does, then you can start trading 1 hour time frame trades. But at the moment, what I'm looking for as well is any divergence, and that CCI is moving in tangent with the price, so nothing really to be concerned about there. For the hourly chart, it's broken above the moving averages of the price chart and also the CCI, and it's a bullish momentum, so you can take long trades. Again, I'd like to see that daily be more convinced and break above the moving averages before taking any trades on the 1 hour time frame. So looking at the 1 hour time frame back test, we started back here according to the daily, and we're going long only. Now there's been a few trades in here. It's hard to tell with the chart showing that way. You can see there's a few average downs taken, and you would have been taking those trades. This massive drawdown happened because of this decline in the price and the CCI, so you would have avoided that. But basically, the way you read this, and I like to zoom out, and I like to draw the divergence targets on each of these. So as the price rises in that little range there, but you see there a bearish divergence on the CCI, you would have closed it out when the moving average of the price started breaking down during that period, and likewise the CCI was breaking down as well. You would have closed out your trade there, and at that level there you would have had approximately $336 if you're trading one contract of a Bitcoin. Now that's considering you can afford to buy the $20,000 whatever it is at the moment, or whatever it was back then. Again, you can also buy obviously fractions of Bitcoin to trade, so this is just using one Bitcoin as an example. But again, following the whole process, going long when assuming the daily is long as well, going long when the hourly is long, but be careful of bearish divergence, like there's another one there. So you close out your trade on that one, avoid trading during that downturn, go long again there, close it out, go long again there, had another little divergence in that range. And more recently, we've had a bullish divergence here. So if you're going long only, again, remember you're only trading in direction of the daily, you could potentially go long after that moving average range on the price and the CCI confirmed that bullish divergence at that point. So you would have avoided that drawdown, and you would have got into the trade somewhere there and started making those profits with a bullish move. So looking at Ripple on the weekly first off, you can see the price is broken below the moving average range, and the CCI is still trending below that moving average on the CCI. Now you'll notice that was after this bearish divergence we had, after that spike up there, and it's actually fallen into that 23-38% Fibonacci range. It sort of bounced into that range for a number of weeks, and then it finally broke through below that, and currently it's retraced back into that moving average, into that divergent 23-38% range. So at the moment, if you're trading on the daily, I wouldn't be going long at this point until you see the CCI and the price break higher than those moving averages. If we go to the daily chart, you can see that it's been seesawing above and below those moving averages, especially on the price chart. You could have taken short trades during that period, a couple of maybe long trades during that, and I'll show you the back test in a moment, but that's assuming you're trading the intraday. Okay, so at the moment, more recently, you would have taken short trades during that period, and you could probably start entering a long trade from where we are at the moment. but just be cautious. That's still in the moving average range, still in a downtrend, but that's still a potential area to go long at the moment on the 1 hour time frame if you're trading on the intraday. Now, what we look for as well on the 1 hour time frame, there's no divergence on the daily. On the hourly, you can see there we've got a lower highs on the CCI versus slightly higher highs on the price. That's a bearish divergence. So if you're going long during this period, then it's probably wise to take your money off the table and get out of the trade. This looks like it's going to break down sometime possibly. So you want to go with the probabilities of trading. It's not necessarily gambling, but it's all about probabilities and making sure you're got most of the indicators in your favor. Now, looking at the back test for the 1 hour chart here, going long from that period based on the daily, you would have taken that long trade there, but again, notice this bearish divergence, and you would have closed out your trade on that downturn of the moving averages, and you would have got out there, and that was returning approximately, well, that was showing $141 or $41,000 roughly. That's assuming you're trading XRP $5,000 lots. Now, it's actually fallen off since then, and you would have avoided going long, obviously, because of that decline in both the CCI and the price. You may have taken a small trade in that little upswing there, but again, closing it out whenever you see both the price and the CCI turn down. You can see there, had you had a $100,000 account, that would have drained your account balance. And here's the short positions from more recently, where the price started on a daily started turning down. You would have taken no short positions, but again, as soon as you started seeing the moving average range on both the price and the CCI turn up, you would have closed it out, and at that point there were no contracts open, and at that point you're holding roughly about $73 in return. Now, again, there was bullish divergence there, so again, you would have avoided going short during that period, paying attention closely to that bullish divergence. You could have taken a trade going short, but again, you've got to be very, very careful, because that could have turned suddenly, and you don't want to be holding too many contracts before you have to close it out with a loss. For some added benefits, if you're trading shares, why not subscribe to the Patreon page? These are some of the trades we've taken in the last month, and they've returned 9.65% so far in about 30 odd days. So reference the Patreon page, links in the description below, to get benefits there for a small cost. Thanks for watching. Hit that like and subscribe button to support the channel, and we'll see you in our next update.